My name is Warren Haber. I'm one of two partners with a fund called Crossbar Capital, which is an early-stage fund focused on first-stage financings in the Metro New York region. My partner and I, in aggregate, have about 25 years' experience in venture capital, both institutional as well as with a number of private firms. Our focus is, as I mentioned, first-stage capital, which can range the gamut from seed-stage financings of about $1 to $2 million, of which we've done 4 to date.
Hi, I'm Mike Biggie with Trident Capital. We will invest in early stage through expansion capital and even towards recapitalizations or small, medium-sized buyouts. We are bi-coastal with offices in Palo Alto as well as up in Connecticut. We are technology and technology-enabled services focused.
Jung Yoon with Global Media Fund. We are an alternative investment fund focused more on the sales and marketing and growth of a company.
Manish with Connecticut Innovations. We're a little different in the sense that we are funded by the state of Connecticut. In terms of focus, we are usually the first institutional investor in the companies. Companies, in terms of industry focus, would be largely information technology and biotechnology. Information technology, again, can be broken down enterprise, B2C, and mobile.
I'm Chris Mayo, Verticom Group. We've traditionally been an investor in healthcare and new media historically, but our focus is really more towards what I would describe as B2B services, which are technology-based or get a technology lever. So it includes all the buzzwords, but we're not very interested usually in B2C type products and services. We tend to invest early stage up to traditionally probably Series B, and that's about it. That's how I describe it. It's fairly traditional in terms of our investing focus.
Just to go down the line again.
Yeah, we've seen a number of interesting trends crop up over the last year or so. Specifically, one of the most interesting is speed. We have noticed because of the structure of development and the way companies have put together their development teams, the way they've structured their management teams, that we can get a product to market in our companies in anywhere from 6 to 9 months. And that's extraordinary compared to what it was 3 or 4 years ago. And I think that what that enables a company to do is on a relatively small bite of capital, whether it be $1 million, $1.25 million or so, they can not only get that product developed, but they can also get a beta out and they can demonstrate market momentum. And frankly, that's one of the linchpins of our fund, is being able to discern relatively quickly whether a company's achieved market momentum. And we've had some success. One of our investments, actually, that my partner made in his prior fund, a company called Pando, which some of you may be familiar with, is actually the fastest growing company in New York today. It's growing at about 1.5% to 2% a day. So what we've been able to do is really identify an entrepreneurial team, a type of development structure, as well as a leveraged R&D type of relationship, which enables these companies to get to market very rapidly. The other thing we've noticed is that we're now, and I don't want to use the term Web 2.0 because I think that's much too limiting, but we've noticed that there are now a whole host of derivative technologies that are coming off of the platforms that have been established. As an example, one of our companies is a premier partner with Skype and PayPal, and is using those, has basically embedded those two technologies to enable real-time dialogue over the web to sell professional services. So we're seeing that a lot of the infrastructure has now been laid out by companies that we thought were kind of real risk takers 2 or 3 years ago, and are now, Skype is, many of you may or may not know, is the 4th largest telecommunications company in the world. It's growing at 129% year over year. These are companies that are changing, they're transforming the landscape. And what that's enabling this new breed of entrepreneur to do is basically look at this, changed landscape and really capitalize on opportunities that weren't available 18, 24 months ago.